Hello traders and welcome back to another Sunday video. We do these every week to help prepare for the week ahead. This is a chance for myself to do my own analysis, but I also like to share it with the community here. If you are just tuning into my video for the first time, welcome. And regardless of whether you're new or not, I want to start this video with a question, a Q&A for you guys in the audience. In the comments section down below on this video, let me know, what is your favorite thing to trade? I'm very curious to hear from you guys. Which assets do you like to trade? Because when I make my videos, I'll try and spend more time on the assets that you guys list down below in the comments. First of all, I'll just go ahead and be upfront. Many of you guys probably already know this, but I like to trade gold, the S&P 500, and some US dollar crosses. These are my favorite things to trade, and so you'll usually see me gravitate towards some of those in my videos as I'm being a little bit selfish with that, just focusing on the things I like the most. Regardless, let's jump into this week's video, starting with the US dollar. The dollar broke out last week with real strong conviction, and you have to, whether you're a bull or a bear like me, you have to respect it, right? This is a serious breakout to the upside, and many traders were left very confused, including myself, about this US dollar pop until I looked further into it and sort of understood what was going on. Let's give a quick fundamental breakdown, and then we'll look at the technicals on the dollar to see if this move has more room to the upside. So fundamental analysis here real quick. We have a couple things I want to mention. The debt situation in the United States, where we have a debt ceiling, and the Republicans and Democrats are debating how we're going to go forward with that, if we're going to raise the debt ceiling, and if so, what are the conditions in order to do that, right? All that sort of stuff. Regardless, this is not a politics channel, but those sort of political tensions are causing people to be a little bit concerned about that debt situation. And as it creeps closer and closer, I think that it has potential to make the market a bit fearful. So what does that do to the dollar? Well, the dollar is, for now, still a global reserve currency. That is what most transactions still occur in, despite recent fears about de-dollarization going on from BRICS nations, that sort of thing. We could get into a whole bunch of stuff there regardless. And then also there's a case for inflation. Inflation was cooler than expected last week. We had both CPI and PPI, which in my opinion actually looked pretty dollar bearish. Regardless, the market may not have been as impressed as perhaps some traders and investors were with the CPI and PPI numbers. They were cooling, but they weren't incredibly impressive, I suppose. Regardless, it may have been a little bit not enough, and the dollar here making a move to the upside. So what's my take on it? Well, let's take a look at the technicals, and I'll tell you. From a fundamental perspective, I'm not very bullish on the dollar, but from a technical perspective, we have to show some respect here. The dollar has broken out of a key level of resistance that held for several weeks as a barrier to price, and now, in my opinion, if this thing pulls back, there's a pretty good shot on the technical analysis side that you may see some follow through. You may see bulls who want to get involved here. Will I be getting involved? No. The point here I'm trying to make is that, for me, technicals are one side, fundamentals are another. So I have to have some agreement. So if I'm bearish on the dollar, but the technicals look bullish, this is a scenario where I just will not take any trades. Hopefully that makes sense, but let's take a look at something that I do have an interest in trading on the long side going into this week. Gold. I talked about this yesterday in a video. Not only am I long biased on gold, I already have a long trade open, and I shared images of that yesterday. So here is my current gold position. I bought gold on Friday, and I continue to hold it over the weekend here, looking to try and see if I can capture a bigger push to the upside on gold. So again, I like to start out my videos. I like to show my account. I know it's not a big thing. A lot of traders on this platform and stuff, you know, it's understandable. It is very, very stressful to show your account to a wide audience. I don't say that to brag. I say that because I personally have been doing this for a long time. I'm used to the criticisms that I get, and I really, to be quite honest, I don't really care. I'm here to do my thing. I trade, and you guys hopefully get something out of my videos. Obviously, that's why you're watching. By the way, take half a second if you're enjoying it to hit that thumbs up button if you appreciate the transparency. I do it for you guys. You know I love you. Anyways, let's take a look at the gold market here from a technical perspective. Price pulled back here. And so I mentioned, remember, keep this in mind as we go through this, fundamentals and technicals Do they agree? Well, the debt situation, I think, also has positive impact on gold. Sure, the dollar might strengthen, but there is that case that gold fears, especially if there's any sort of question of default, if there's concerns about that going forward, gold could see a pop to the upside off of the fear sort of situation, right? As many of you guys know with gold, fear can be a driving force. But there's also some headwind in the sense that, slowing inflation numbers in the PPI area specifically could be lending towards a slowdown in the economy, which if we know, what that could mean for rate hikes, it could mean a slow in rate hikes. It could mean that at some point they even rate cut. And if they cut rates, that of course opens up a very bullish case scenario for gold. So fundamentally, I do like it on the long side personally, but technically I also like it. So let's take a look at the technicals here on the daily chart. So you can see we have a strong upward trend. I would say unless we break this area around 1980, this trend is still intact, and I'm expecting higher prices until we see something to the contrary. So for me as a gold trader, I will be looking to hold my long position going into this week. Is this a guarantee? No. Can I be wrong? Yes. The reason I say all that stuff is because, again, this is YouTube, and you never know when someone brand new to trading hears me say something like that, and they decide, oh, Nick couldn't possibly be wrong, and they go all in, right? Please do not do that. This is my opinion. These are my analysis. This is my analysis going into the week, and I can be wrong. My caveat here is I'm trading with a very large trading account size compared to perhaps a newer trader might have, and I'm risking still a small component of that account regardless of how confident I am in a trade. Always risk small because, again, you never know. Markets are fickle. They can do sudden things and change on a dime. So let's keep going. We'll take a look now at the S&P 500. So the S&P 500 still caught in a range here. Not really too interested in this this chart here for now. I would love to potentially be a buyer if we break out higher, if we see something like a clear into the 4200s area. Any pullbacks, I'm looking to get long. However, you also have NASDAQ, which is on a different wavelength right now. It's breaking higher, and we see some divergence between the S&P and the NASDAQ. We had a really impressive breakout here to the upside, and this pullback was even met with some buying pressure on Friday. I was not one of those buyers. It doesn't quite fit all the criteria that I need for a trade, which if you're asking what that is, I use software to help me find trades. And while we're on the software, let's take a quick look in terms of the markets in terms of retail positioning. So this is always an interesting indicator, especially for my currency traders out there. I'll look at other things in a second. Retail positioning shows us what retail positions are looking like. So right now, if you were to read this, you would say, well, NZD and AUD against the US dollar seem to be very much bought by retail traders who, on average, most of them lose money, like a majority of them lose money, like 90% plus. So if they lose money and they're all long on these pairs, that's going to be a red flag. We'll flip it around. They're very short on dollar yen and they're short on dollar CAD. So there it is for those of you who are currency traders. But what about let's add in the commodities and we'll add in the indices for traders using these instruments. And you can see we have an interesting dynamic here. This doesn't even seem like it's right. It seems like there might be an error in the data for these two. Let's just refresh this to see if we get anything. Yeah, no, this must be an error. It doesn't seem like we're getting a good read on this, but the rest of them seem normal. Usually, I've never seen 100% short, and I don't think that that is correct. So, I would just ignore those two readings, but let's look at the rest of them for now. The S&P 500, very short biased. UK 100, also very short biased. You have the DAX, you have gold 50-50, so not a big preference on gold. Oil, the Dow 50-50, and US oil very long by retail traders. So there you go. There's your positioning in terms of retail sentiment. Now, let's also take a look at the watch list going into this week. So when I say criteria for me to take a trade, remember guys, most traders, and we talk about this often, most traders look solely at charts. And as we mentioned earlier, I like to use fundamentals and sentiment of the market to try and help me guide into better trading opportunities. I don't just use pure technical analysis to place my trades. I'm using all of the things that you see at the top of your screen right now. All of these things are components that I pretty much consult before taking trades. These are mostly not related to what the chart itself is doing. These are things that are real world forces that drive prices. And so many traders choose to ignore these sort of things, but I choose not to. I choose to pay attention to what is the GDP growth, what is the economic growth of the two currencies that I'm looking at, or how is US growth compared to Japan or whatever, right? Interest rates are also very important, as many of you guys will know. If you've been, for any of us who have been trading the last 2 years, interest rates have been all the rave. They've been, talked about all day long, in and out. So anyways, what's on the list? Well, here's my gold idea, still hot off the press. And we do have Bitcoin. We just added Bitcoin to the chart. We'll have more information about that coming out soon, but Bitcoin is just about ready to go, just been added to the EdgeFinder, which is exciting. Getting a sell reading here right off the bat. Retail sentiment, retail crowd very long, right? Giving us a bearish bias, seasonal trends on the downside during the month of May, right? So on and so forth. So we also have, in terms of currency pairs, you've got euro dollar and Aussie dollar coming out as strong sells. Let's go look at the euro here and see what's going on here. So this one has been really a strong sell on the EdgeFinder, or a sell on the EdgeFinder for the last week or so. I've been watching it sort of develop, and now we can see this chart looks very bearish. Look at the key breakout, right? Huge support level got taken out, and now the question will be, on any sort of retest going into this week, will there be an opportunity to look for short continuations on this euro dollar idea? That will be interesting. I mean, I really like this chart. It's a very simple dollar cross that I'm happy to trade. I like the euro against the dollar, right? Very liquid, tight spreads, that sort of thing. We also have the pound USD as a possible sell. So again, consulting this, you can see we've seen now sort of a falling out of this pound dollar uptrend. What was just an unbeatable, uptrend here seems to have kind of fallen apart a little bit. Now, I would say the last thing I'll say about the pound USD here is, before I'm really interested in selling, the interesting thing here with the pound USD is it's hitting a support level, and I want to see if the dollar is truly strong enough to break a level like this, where we found major support before a strong rally. Clearly there was a sell in here that could have made sense in hindsight, of course. But the question will be, will that selling pressure have enough impact to get us below key structural levels around 1.2450? So that's an interesting chart, I would say, watching for breakouts there to the downside. You've got things like euro yen and dollar yen. So let's look at the yen crosses. Dollar yen, I would say, is pretty impressive right now. The dollar yen has been trending well. This is your 4-hour chart analysis, and you can see we held support very nicely here, rallied through there, and we were even able to break out of a key level of what was resistance here when we were chopping back and forth. So I think now, if you're a dollar yen bull or dollar bull regardless, if you think there's some upside on this, this has some strong correlation to the bond yields market in the United States. So for example, if the 2-year or the 5-year or the 10-year bond yield is set to rise, the dollar yen tends to move in positive correlation to that. Again, that is due to, of course, the dollar and the yen's correlation specifically. Now, this is not necessarily the same with like euro dollar, but you can see we're looking at USDJPY. If we took a look at the 2-year, you can see it looks a lot similar, right? Just a little cool market fact for you. You can always go take a look at that on your own side, on your own time. So again, I think that there may be a room here to expand higher. Perhaps we even retest this 137.6. Real interest, I think, on the higher time frames would be interesting if you were to get a breakout of this level, because of course we've been in this daily down trend, then we shot back up, and now we've been sort of in this range on the higher time frames. If you get a bigger picture breakout this coming week or weeks, 138 breaking out would be very interesting. That would be actually very concerning for what's going on in the market if this event occurs. That would be forecasting for possible rate hikes. And so kind of an interesting thing that we saw that this past Friday. So I would be cautious, right? So I don't necessarily think that further rate hikes are coming, but perhaps the market is pricing in that possibility. So not my favorite trade fundamentally, dollar yen is, but from a technical perspective, I think you may have just a room to squeeze higher up into that 137.4 area. I think that's very possible, especially for these short-term traders out there. Keep an eye on this one as it does look interesting. You've also got euro yen. Euro yen downward structure here. This is interesting, and again, a key example that I went over in a live stream recently about our concept of technicals, fundamentals, and sentiment. Technicals here are, in my opinion, pretty clearly to the downside, right? You've got lower highs and lower lows on this chart. Whereas fundamentals, I would say, have some room. I don't necessarily think the yen will continue to get too much stronger here. And that is, of course, yen strength, fear in the markets is what's driving euro yen down. Question will be, is that going to continue? Well, I think not necessarily. And I could be wrong about that, as I always can be wrong, right? I'm not a crystal ball owner. I wish mine's still in back order. They've been sending it to me my whole life. It hadn't gotten here yet. But the point is, technicals still look pretty bearish, even if I do like it fundamentally and sentiment-wise, right? Institutional money is very much long euro, short yen. We've seen that in the EdgeFinder as well. And fundamental analysis is, of course, still, in my opinion, I don't think the yen is set to get too much stronger from here. So we'll see. Technicals, however, keep me out of this trade unless we start to see a breakout. If we see higher lows, higher highs, breakouts of structure, maybe I start entertaining this idea on euro yen. But again, I don't love the chart for this current week that we're going into. So there you go, guys. That's going to be everything for me today. If you guys do want access to the EdgeFinder, by the way, there is a discount code available in the description down below. If you made it to the very end of this video and you are interested in getting our software, you can get access to the COT data, see what institutional money is buying and selling. You can get access to the retail sentiment indicator we reviewed today. You can get access to our watch list and signals for 30 plus assets and pairs, whether you trade gold, currency pairs, indices, etc. Our company builds software tools for traders. We're building the best possible tool we can possibly make, and we love your support and your feedback. Anybody who purchases access to the EdgeFinder gets all future updates for free if you get the pro version. And the cool component of this is we are constantly developing this. We are a software company out of Atlanta, Georgia. So by buying it now at these current prices with that discount code, you will get access to future updates, additions, like we just did with Bitcoin here this past week. We're always adding new things. So I invite you to get your access to our software today. And thank you guys for watching. Have a great week ahead and trade safe.